welcome to the 2018 first quarter market update on the real estate market for Abbotsford and Mission. My name is Don Gertz. Today we're going to take a quick look at three areas of our market. First, we're going to look at all property types, giving us a general feel for things. Then we'll take a look at detached housing, and then to finish it off, attached housing. For each of these categories, we're going to consider the housing price index, which is sometimes referred to as the benchmark price, the active listing count for each area, otherwise known as our supply, sales to active listing ratio. This ratio is used to determine if we're in a seller's or a buyer's market. Then the number of sales we're having, which is also known as our demand, and how many new listings are coming available, which shows us whether our market is trending up or down. And we're going to finish that off by looking at the days on market, which shows us the volatility or speed of the market. So first, we'll look at the HPI overall. As you see, in March 2017, Abbotsford was at 488,300 and Mission was at 530,100. This graph stops at February, but the market stats package released today shows these numbers have increased to 623,100 for Abbotsford and 641,900 for Mission, representing a 27% increase in Abbotsford and a 21% in Mission. Current inventory levels are down from the last number of years, and you can see from the graph that they've been trending lower for the last 2.5 years. For much of the last 5 years, we were at levels higher than 800 in Abbotsford and 400 in Mission. Without higher levels of inventory, and should our demand be sustained, there will continue to be upward pressure on our home prices. When we look at the sales to listing ratio, we should know that anything above 25% is the seller's market, and anything below 15% is the buyer's market. As you can see, in the last 3 years, we rarely dip below the 20% level, keeping us mostly at a seller's market. The graphs that relate to sales show us the demand but also shows the cycle of the market in any year. You can see the busy times compared to the slower times. This could be useful as you plan your next move. I like to look at the days on market in terms of speed. People ask how it's going, and it's kind of like driving on the freeway. You can be going 120, or maybe you even drive a little faster on the Coquihalla and then get off and hope, and it seems like you've just slowed down right to a crawl. But in actual fact, you're probably still going 90K and making better time than you thought you were. That's what the real estate market's like. We've been going so fast that even now that it's going back to more normal levels, it feels like we're going a little bit slower. So looking at the detached statistics, we can see many of those trends are going to continue. The HPI for detached house in Abbotsford went from 687,200 to 803,300, almost a 17% increase. Mission saw the index go from 563,300 to 653,500 for a 16% increase. Active listings for both areas are down significantly. Sales to listings ratios are still trending into the seller's market conditions. Sales are lower than the past 24 months, but still strong compared to the last 5 years. And days on market are low at 10 days for Abbotsford and 13 for Mission. Switching over to the attached properties, there isn't enough info in the housing price index, so we're going to look at median sales prices instead. But you see there's a lot of volatility in Mission with more of a steady increase in Abbotsford. This volatility in Mission would likely be caused by the lack of inventory. When we see that on the next couple slides, fewer properties give a smaller sample, and an unusually high price or an unusually low price on a property could sway the result. The sales to active listings ratio shows where the majority of our activity has been and what segment of the market is most active. With ratios consistently over 50% in Abbotsford and 25% in Mission, we can see that the impact of higher detached housing costs on the lower priced attached properties, making them much more popular. The number of sales are still showing good strength, and days on market still being quite low. But that remains the question is what can we expect in the future? From my perspective, April and May will be pivotal months. The full impact of the new mortgage rules will have come into play. The new taxes initiated will also be having some influence, and not the least is our government's resolve to lessen the demand for housing in the real estate market. The British Columbia Real Estate Association economist recently published a market intelligence report, which I received by email this morning. It was somewhat alarming, but I'll leave a link to the article in the comments for those who are interested. The title is Careful What You Wish For. They go on to discuss the implications of a negative shock or a negative reduction to our home prices that our home prices would have on our economy. For many of us, at first anyway, it might sound good that there could be less demand for property and for values to drop somewhat. After all, prices shot up in a hurry, didn't they? But I think we need to ask another question. Was this a result of a recent phenomena, or was it the result of a buildup of demand over the previous 5 to 10 years, where the end result was really where we would be with a modest straight line inflation rate of about 4%? Regardless of what you believe, if you are planning to make a move this year, you should be aware of all the factors that are potential in impacting your decisions. Now, I'm neither politically motivated nor negative in my thoughts about our future. You might say that I'm a free enterprise advocate of sorts, but I also been around the block a few times in my 34 years in real estate and know that there's an ebb and flow to the real estate market. Nothing stays the same. Nothing is 100% secure. That's the reason for my philosophy, which has always been and remains to provide the most accurate information possible so you can make the best decision possible for you and your family. And no one knows what the future holds. BCREA suggests it might not be too bright if some of the things they think might happen. I know there are a lot of developers, though, who are willing to invest a lot of money because they think it's still going to be good. I remember a time when house prices had virtually doubled and interest rates were astronomical. Sonia and I had resigned ourselves to the idea that we would likely be renters for a long time because it all seemed so far out of reach. But really, only a short time had passed and we were able to successfully purchase our home. If you're in that position, I think that you still have hope. Home ownership is still an important objective to many Canadians, and it's our goal to be able to help you find your new home. If I can be of further assistance, please feel free to contact. I'm Don Gertz with the Gertz team.